It's the start of the Wintrust Business Lunch, a very happy Tuesday afternoon. We heard Steve mention stocks are down after, a couple weeks of very flat results on the markets. In the last hour, I mentioned Eric Zorn, the jobs I didn't want. I want to add one more to it. The president of the Fed. They're in a tough spot. They have been for the past couple of years. Philip Shaw joins us now. He's the senior advisor at Goldstone Financial Group. Philip, thanks for joining us today.
Yeah, thanks for having me, John. Looking forward to it.
Yeah, and I just feel like the Fed is caught between a rock and a hard place, right? Inflation is going down, but it's still higher than we want it. They've sort of prognosticated they want to go up a little bit more with the rates, but as they fear a recession coming, it's almost like, boy, how much further can you go up and really throw a wrench in this stuff? They really have a tough decision to make, don't they, coming up?
Yeah, they really do. And to your point, between a rock and a hard place is it's almost like a little bit of short-term pain for a long-term outlook on this. Is inflation is going to be a really big issue if they don't get this under control, which is why the Fed has been saying that most likely rates are going to be higher for longer than people expect. Their hope is that they don't really push us into a recession, but it's becoming more likely every time they raise rates.
Yeah, it's almost like if they know a recession is coming, which of course no one does, if it's mild, it's almost like they weigh the idea of, hey, a mild recession, no good, but better than sticky inflation for another 2, 3, 4 years, right? And that's a tough choice that they have to make.
Oh, and that's exactly what they're going through. And they've been pretty vocal about this from the onset, is saying we are planning on slowing down the economy. And that's really what recession is. It's not a crash per se. Everyone gets this idea of the last recession being what the next one will look like. And this is not going to be a 2008 kind of, crash of the economy, crash of the market. A recession just means we've actually slowed down for 2 quarters in a row.
Yeah. Yeah, it'll be hard to know exactly where we are until we get there, but they'll certainly take that, a slighter dip than the pains of what we saw in the late 70s and early 80s, because that can really mess up people's financial futures.
Oh, absolutely. Absolutely. Trying to avoid that sticky inflation is their first priority right now, much more than keeping us out of a recession.
For sure. We've talked a lot about, I also host the Your Money Matters program at 6 o'clock Monday through Thursday, shameless plug. And we talk a lot about financial literacy and how important that is to newer generations. And I often applaud certain TikTokers or Instagram reelers who make videos trying to tell the lessons of compounding interest or get into young people's minds some good, sound financial advice. But as you point out, there's a dangerous side to that, isn't there, on social media?
Yeah, there really is, and it's important to know who you're talking to or who you're listening to when you're going out looking for social media financial advice. It's Gen Z and millennials are probably the biggest consumers of that kind of social media financial advice. But it's important to know, is the person you're talking to actually a licensed financial advisor? Do they have your best interests at heart? Do they have conflicts? It's really difficult to see that, just with the average, TikToker, as you say.
Do you think that someone has to be a financial advisor on social media to give good advice, or are you just suggesting, hey, look, know where the information's coming from so you can plan accordingly?
No, I agree with you. I don't think somebody needs to be a financial advisor, but there's a lot of important reasons why our industry has regulations. For example, if I have a conflict of interest with a client, I can't sell somebody a stock per se and then run the price up and sell it. The reason that we have some of these protections is so that hey, where is the advice coming from? What is this person's, interest in giving me advice? Do they have a conflict with me somewhere? And so, if they're not regulated, if they're not licensed, it's not necessarily they're giving you bad advice, but you should at least be aware of, hey, what's the incentive? Where is their advice coming from?
Right. And it's also, there's such a difference between financial literacy, right? Like me explaining T-bills on TikTok versus here's how you get rich quick. So you kind of have to pay attention to the message just as much as the messenger.
Yeah, absolutely. And anybody that's telling you that they have a get-rich-quick scheme, I'd be very wary of anyone that says they know exactly what the market's going to do, if they know exactly what some investment's going to perform for you. I'd be very careful about that. The biggest thing in becoming wealthy over time is investing and having a lot of time on your side.
Yeah.
Not finding the winning lottery ticket.
Amen there. Philip Shaw, Senior Advisor, Goldstone Financial Group, goldstonefinancialgroup.com. Thanks for your time, Philip.
Great. Thanks for having me.